Our goal was down, falling stock market, recession, maybe a financial crisis. There could be a financial crisis early in Trump's first year. So he's got bigger fish to fry than trying to pay back his donors and voters on Bitcoin. The fact that these stocks are down so much shows you how negative the sentiment is in gold. But how negative the sentiment is in gold, that's how positive it is. We're not going to make more cuts. So even though the Fed is signaling that we may have 2 cuts in 2025, we may not have any cuts. And if those cuts are not going to happen, the market's going down.
In today's news recap, gold price sharply down on Fed's surprisingly hawkish pivot. Gold and silver prices are strongly lower in early U.S. trading Thursday, following a surprisingly hawkish turn from the U.S. central bank Wednesday afternoon. Gold prices hit a 4-week low, and silver prices a 3-month low. February gold was last down $39.10 at $2,614.20, and March silver was down $1.12 at $29.61. U.S. stock index futures have rebounded, and U.S. Treasuries have steadied overnight after the Federal Reserve's surprisingly hawkish pivot on U.S. monetary policy Wednesday afternoon. While the Fed announced a 25 basis point interest rate cut as expected, the FOMC's quarterly summary of economic projections showed the majority of FOMC members now expect just 50 basis points in rate cuts in 2025. That's a major change in the FOMC's thinking since the last dot plot meeting in September, when the FOMC forecast was for 100 basis points in rate cuts in 2025. The hawkish pivot sunk precious metals, saw a big surge in the U.S. dollar index and in Treasury bond yields. Fed Chairman Jerome Powell said in his post-FOMC press conference, "This is a new phase where inflation concerns are back on the table." While the new policy setting is still meaningfully restrictive, that's what it needs to be, because inflation remains above the 2% target, he said. "We still have work to do to bring down inflation," said Powell. Asian and European stock indexes were mostly lower overnight. U.S. stock indexes are pointed toward firmer openings when the New York day session begins, on a modest rebound following Wednesday's sharp sell-off that pushed the S&P 500 futures to a 6-week low, saw the index suffer its biggest Fed decision day loss since 2001 and the biggest one-day loss since the pandemic in 2020. Meantime, a stopgap U.S. government funding deal has fallen apart following opposition from President-elect Trump, increasing the likelihood of a government shutdown this week. If the debt ceiling isn't raised and the U.S. government shuts down, that would definitely lead to chaos, said a Bloomberg report. U.S. equities may be hit, but any spike in U.S. yields may drag down rest of the world, said the report. Now we'll show you more clips, but first, smash the subscribe button and check the pinned comment to get yourself the best VPN deal on the market. You'd be crazy not taking advantage of NordVPN to safeguard your privacy at these prices. Enjoy the episode.
There's a huge disconnect right now between economic reality and this economic fantasy, but it has caused this upward trajectory in the dollar. Again, I don't know how much higher the dollar is going to go than it is right now. I mean, it certainly could move higher, and that could put more downward pressure on gold. But, remember, in terms of foreign currencies, gold is holding up. And, it's not up $30 anymore. It's up $24, but it's still back above 2,600, 2,608. Look, I think gold is acting very, very strong. I read an article that the Chinese have been buying up a lot of gold recently. They're not talking about Bitcoin. They're buying real gold, and they've been buying a lot more than they've been letting on. I know there were some rumors, the Chinese don't want to buy gold now that Trump is there threatening them with tariffs. You know what? That means they want to buy even more gold. Whatever the U.S. doesn't want them to do, that's exactly what they're going to do. So take advantage of the weakness in gold. Silver also got hit. It's back below $30 right now. It's at $29.50. I don't think it's going to stay below 30. Again, I think this is where the support is in silver. So we should be buying the dip. You should be calling up the guys over at Shift Gold or just going onto the Shift Gold website and fill up your shopping cart, with gold and silver while they're on sale. And yeah, I know that we're seeing the foreign markets coming down, mainly because of the dollar going up. So a lot of the weakness in the foreign markets is currency related. But I think stocks are going to go down a bit too in sympathy with the U.S. stock market. But the U.S. stock market is a disaster waiting to happen. And the only way to avoid that disaster is to create a bigger disaster in the dollar. So either the stock market crashes or the dollar crashes. One of those two things is going to happen. I think it's the dollar, although the stock market will go down first. And that's one of the reasons that the Fed is going to go back to QE. The Fed is going to sacrifice the dollar to prop up the stock market and the economy and the bond market and the U.S. government. All that's coming. So in the meantime, just keep on buying these foreign stocks. Keep on adding, I think, to your Pacific accounts. Keep on taking money off the table in the U.S. stock market. I know people just think, hey, it's going to be great because Trump is president. Look, yes, it's better that Trump is president than Harris. The market was going to go down with Harris. The market was going to have to go down either way because the market was so expensive. But the worst of the economic downturn, the worst of the consequences for the years of fiscal and monetary profligacy, they had yet to be paid. That was going to happen. This was, guaranteed. It was assured to happen. And, that was one of the concerns I had for Trump, was that it all blows up on his watch. But one of the reasons I did want Trump in the White House when it hit the fan was because it would be much better to have Trump and his team than Kamala and her team in the aftermath of the collapse. Not because I thought that electing Trump would prevent the collapse. I just thought that electing Trump would put us in a better position after the collapse to do the right thing. Money is cheap. The real rate of inflation is much higher than the government admits. We have negative real interest rates. If you put a real inflation rate and then discount those interest rates, debt is at record highs. Everybody is borrowing. I said, government has never been borrowing as much money and spending as much in deficits as it's doing right now. Could the government be this reckless if we had tight money? Of course not. That's the point of tight money, is to force everybody to tighten their belt. No one's tightened anything, right? In fact, they've gotten rid of the belt. They removed the belt and untucked their shirts, right? This is easy money the whole time. That's why we've got, on pace maybe for a $4 trillion budget deficit. So it's excess on Wall Street, excess debt and credit on Main Street, because the Fed never got into restrictive territory. Now, why? Why did the Fed stop well before rates ever got restrictive? Because the wheels started to fall off the bus. Signature Valley Bank, Silicon Valley Bank, or Signature Bank, Silicon Valley Bank went belly up. The dominoes started to fall, and they would have kept on falling had the Fed kept on hiking. Well, they stopped hiking, and they, stopped the financial crisis. Well, now that they've taken away a lot of the easing, this is like a hike, right? Even though the Fed cut rates today, for all practical purposes, they just hiked them, right? Because they're less loose. They took away some of that punch bowl. And so I think this is like a hiking cycle that the markets didn't expect. And so we're going to resume the financial crisis that was interrupted when the Fed stopped hiking. Now that they've kind of started a tightening cycle, we're going to resume that financial crisis. Look at the industrial production numbers that came out. These are horrible numbers. Industrial production dropped by 0.1%. Dropped. So we got a booming economy. We got a remarkable economy. and our industrial production is going.
In the continuation of the episode, Peter highlights the critical role of gold and silver as safe haven assets amid growing economic and financial uncertainty. Gold prices, which initially dropped $60 following the Federal Reserve's rate cut announcement, partially rebounded, showing resilience in volatile conditions. Despite gold's strong performance this year, up 25%, Schiff pointed out the sharp underperformance of mining stocks like Barrick Gold and Newmont Mining, which have declined more than 30%. Silver also slipped below $30 per ounce, but Schiff described this as a buying opportunity, emphasizing the strategic value of both metals in a challenging economic environment. Schiff expressed concerns about the Federal Reserve's direction, particularly Chair Jerome Powell's acknowledgement that inflation could take up to 2 years to return to the 2% target. He expects the U.S. administration, under growing economic strain, to pressure the Fed into easing further, likely returning to quantitative easing to stabilize markets. However, Schiff warned that such a move would sacrifice the dollar's value, triggering a broader inflationary spiral. The combination of persistent inflation, fiscal irresponsibility, and a potential recession creates a bullish case for gold and silver as long-term hedges. Bitcoin also featured prominently in the discussion. Schiff noted that Bitcoin recently hit a record high above $109,000 before falling below $100,000, reflecting extreme volatility in speculative assets. He dismissed the idea that the U.S. would ever declare Bitcoin a strategic reserve asset, arguing that the incoming administration would face far greater challenges such as managing inflation, financial instability, and a potential recession. While Bitcoin's meteoric rise has captured attention, Schiff remains skeptical of its long-term value compared to gold and silver. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
But these guys are still adding on new government spending as deficits are exploding out of control. So the bond market is concerned about this. Now, I think it would be a lot worse for the bond market if the dollar was falling, but it's not. The dollar surged today to a new 2-year high, dollar index above 108. The euro, I think, is it down to 103? Let me check where it is. The euro is trading at just under 104. So 103 and 3/4. It closed. It's up a little bit in the evening. It was at 103 and a half. But dollar index above 108. So the dollar is soaring. It's the only thing that was up today was the dollar. Everything else, the stock market, the bond market, the Russell 2000 was down better than 4% on the day. And, the Russell 2000 is now down 1% since Trump was elected. A couple of weeks ago, it was up 9%. So we've had a 10% decline, now a full-blown correction in the Russell 2000. The QQQ was down, that's the NASDAQ 100, was down 3.6 today after hitting a record yesterday. In fact, several NASDAQ stocks had some pretty big reversals today where they hit new highs and then they got clobbered later in the day after the rate hike. But everything was down except the dollar. Gold was down about $60 an ounce today. It's up about $10. Now it's up $30. I don't know. So now it's back above 2,600. It's just regained. I don't know what just happened. I looked at the price of gold 10 minutes ago and it was up $10. Now it's up $30. So it's regained half of the $60 loss already. So we're back above 2,600 at 2,612, but we were down below 2,600 when trading closed. But what's amazing? The gold stocks, again, got absolutely hammered today. right? Barrick Gold was down 4.5%. I'm giving you the big ones. Newmont Mining was down 5.5%. This is how ridiculous it is. So gold, before this $30 rally, because I looked at the numbers before this rally. So before this $30 rally that we're having right now, gold was down about 7% from its peak, about $200. That's it. I mean, right now it's down less than $200 from the peak, but that was 7%. If you look at Newmont Mining and Barrick Gold, Barrick Gold is down 13% year to date. 13%. Newmont is down 8%. Gold is up 25%. I've never seen a year like this. 25% increase in the price of gold. Yeah, it's not the 30% that it was, earlier, but 25% up is a hell of a year. One of the best years for gold. And these stocks are down. Now, it wasn't too long ago, before Trump was elected, the gold stocks were up more than gold. Now, they weren't up a lot more like they should have been, but they were up more. But since their peaks, even though gold is only off 7% as of earlier today, Barrick Gold is 35% below its high. 35%. Newmont Mining is down 33%. These stocks are trading at less than 12 times earnings. So what does that tell you? About the sentiment. They're less than half of the market multiple. The fact that these stocks are down so much shows you how negative the sentiment is in gold. But how negative the sentiment is in gold, that's how positive it is in everything else, right? Because it's the mirror image. You have crazy optimism on the overall stock market, ridiculous optimism in Bitcoin, but extreme bearishness, extreme pessimism in gold. Now, what investors don't understand, what the Fed doesn't understand, Bitcoin, since my last podcast, I think it was on Monday, or maybe yesterday. It was yesterday. Bitcoin made a new all-time record high. It got close to 109,000. It's hard for me to read the writing there on my screen. I know it was well above 108,000. Well, as I am speaking now, it's barely holding on to 99,000. So maybe that 100,000 Bitcoin party is finally coming to an end. Of course, most people will have stayed much too long at that party. We'll see what happens to shares of MicroStrategy stock. Saylor bought more Bitcoin. He announced on Monday another $1.5 billion spent buying Bitcoin. And I noticed just a lot of PR coming from Senator Loomis and other people on the Bitcoin Strategic Reserve. And now they're trying to spread these rumors that in order to bypass Congress, because there is no appetite in Congress. I mentioned the increase, the Social Security Fairness Act, right? That passed the Senate. It's in the Senate now. It passed the House. 327 yay, 75 nay. So the majority of Republicans voted in favor of increasing spending on Social Security, right? There's no fiscal conservatives. These are all rhinos. There isn't a prayer of any meaningful cuts being passed by this Congress, right? The Doge might as well pack it up, turn off the lights at the Department of Government Efficiency, because nothing is going to be accomplished. They got a much better chance of going at it through the Supreme Court. And the only way Trump is going to get anything done is if he refuses to sign the increase in the debt ceiling or any of these continuing resolutions. But he's not going to do that. So the spending is going to keep rising. But so Bitcoin will see. The point I was going to make is that Trump is not going to sign a presidential decree declaring Bitcoin a strategic asset and just buying it, authorizing the Treasury to buy it without the U.S. Congress. It's just not going to happen. Plus, Trump's going to have a lot to deal with, right? Bitcoin is going to be pushed aside. He needed the support of the crypto people to get elected. He doesn't need you people anymore. He's already in office. So, you forget about it. he's going to be facing a falling stock market, recession, maybe a financial crisis. There could be a financial crisis early in Trump's first year. So he's got bigger fish to fry than trying to pay back his donors and voters on Bitcoin by giving them an exit. I think Donald Trump probably figures that he's square, right? He helped get Bitcoin above 100,000, and he gave everybody a chance to sell. All of his donors that gave him big bucks had plenty of opportunity to sell their Bitcoin and cash in on their Donald Trump investment. So he's going to have much bigger problems to deal with than trying to waste time with a strategic Bitcoin reserve. That would only add to America's problems.
Do you agree with Peter's take on the Fed's hawkish pivot, the future of gold and silver, and the potential fallout for markets and the dollar? Or do you have a different perspective on how these policies will play out? Share your honest thoughts in the comments below. We want to hear your opinion on this evolving situation. Let's keep the conversation going and explore what these developments mean for all of us navigating these uncertain times. Don't forget to like, subscribe, and hit the bell icon to stay updated on our latest content. See you in the next episode.